Welcome back to Bull Sessions here on 680 KFEQ. Here's your hosts, Randy Baker and agronomist Brad Law.
Okay, we're back again, Bradley, and we've got Stephen on the line.
Okay.
We're going to be talking to him a little bit about taxes and tax preparation.
Maybe he can crunch numbers and you won't make fun of him like you were me going through my plot data.
He's a professional. I won't.
Okay, I will give him that. He's very good at what he does.
And you can't even spell IRS. So we got our focus on the farmer coming up, too, here.
Yes.
In our next segment.
Got somebody good.
Don't let me forget it.
Is he from Iowa?
He is from Iowa.
Okay, I think I might remember.
I
might remember. Okay.
Okay, so let's go.
Well, okay, we talk about a lot of things on Bull Sessions. We talk about growing more bushels, and we all want to have more money. Mm-hmm. We can fertilize.
Yep.
We talked about different varieties. We've talked about changing populations and, searching for the best deals on something and try a different management out in the field because we want to grow more bushels, get them more bushels across the scales.
Yeah, we do.
And we want to try to sell them for as much as we can. Okay, but do we stop there?
No.
No, we can't stop there. One thing we need to also look at is getting our paperwork organized for the tax man to see maybe we need to sell something, maybe we need to buy something before the end of the year, or put this off till next year, and do a little bit of different management.
It's a very important piece of this puzzle we're putting together in farming.
And that makes me think of,
what are we doing now?
You remember Porter last year after Thanksgiving? We all want to be rich.
Bradley, you and Miles are so creative behind my back.
Okay. Well, let's see. Do we have Steve on the line?
Are you
there with you?
There he is, Brad.
There's Steve. All right.
Steve's going to help us buy a boat.
He's going to help us buy a boat.
Yeah, he is.
I don't think he'll let me deduct that, but...
How you doing, Mr. Luke?
I'm doing well, thank you.
Glad to have you with us today.
Thank you.
Brad's got some
I've got
questions.
A list of questions, and, we'll just... If it's okay with you, Steve, we'll just dig right into these.
Sure.
Keep him honest.
We have... My mother always told us, you have to keep this. You got to save this paper. Ever since I was little, you got to save this. You save this receipt, and then you end up with a couple decades of paperwork hanging around. How long do we actually need to keep all these old papers?
Realistically, a tax return is considered a permanent record. You never want to throw a tax return itself away. Mm-hmm. Underlying documents and records, bank statements, receipts, invoices, ledger books, 7 years is sufficient to keep those.
Okay. So we don't need 2 decades, just 7 years. Okay.
Correct. Now, the tax return itself, you should never throw away a tax return.
Okay.
But the underlying records, 7 years.
Okay.
Okay. Now, when we talk about, forms and stuff, I've heard that a 1099 is not a tractor. It's a tax form. So what is that 1099, and when do I send Randy one?
Okay. Form 1099 is a reporting form. Similar to a W-2, except you don't send it to an employee. Mm-hmm. You send a 1099 to anybody that you pay more than $600 for rents or services in the course of your trade or business. Now, that last part of the phrase is what's important. It's in the course of your trade or business that you pay them, that you have to send the 1099. So really what we're dealing with is deductible expenses here. So if someone comes out and roofs your house, which is a non-deductible expense, you would not send them a 1099. Somebody comes out and roofs your barn, which is a deductible farm expense, you would send them a 1099.
Mm-hmm. Okay. Or if Randy came over and mowed hay and did over $600 worth of mowing for me, he'd get a 1099.
Exactly. But if he did $600 of mowing on your yard, you would not send him a 1099.
Okay.
Okay.
What if it was $700? Would you then on a situation like that?
It's $600 or more.
Okay. Okay.
That's the $600 is the minimum. Once you hit $600 on up, 600 to 60,000, you send a 1099.
Okay. Anybody doing custom work or anything on your farm?
Custom work,
You send them
custom
over
work,
600.
combining, trucking,
Yep.
that sort of thing.
Okay.
Okay.
Yep.
So, one curiosity thing is, how long have you been filing taxes for other guys?
Actually, I've been on my own up here for 25 years this year.
Wow.
Whoa, that's a long time.
It goes fast, don't it, Stephen?
Okay.
Bradley's young.
Well, every year the government likes to change things. And what are some major tax changes relevant for farmers for this coming tax season?
Well, the tax law is really pretty stable for this year compared to last year. We still have the 50% bonus depreciation on new purchases. We still have the $500,000 expensing election on equipment purchases. The big changes this year are really administrative, and the big one is that in the past, you had until February 28th to file your W-2s and your 1099s with the IRS. They have changed that for this season to where 1099s and W-2s have to be filed with the IRS by January 31st.
Oh, so you got to be on the
crunches
ball.
the time.
Wow.
So with 1099s and W-2s, you know, the rule is you're always supposed to have them out to the recipients by January 31st, but you had until February 28th to file them with the IRS. Well, they've crunched that up now to where you have to have them filed with the IRS also, as well as distributing them by January 31st. So that, you know, that tightens up that time frame. The other thing is they've changed around the due dates. C corporations, if you've got a farm with a C corp, in the past it was due March 15th. If you were a calendar year, and this year it's due April 15th. If you had a farm partnership, partnerships were due April 15th. Now they're due March 15th.
Oh, some changes coming about.
So
Yes.
And to make it confusing, they left it all on the 15th.
Exactly.
Okay. And that's
Wow.
why people hire help to do this.
Exactly.
And that would be something that could be an easy mistake to confuse April and March and the 15th. What are some, common mistakes that you see farmers make when they try to do things themselves?
When they try to do things themselves, the most common mistake they make is trying to do it themselves. Other than that, not planning beforehand, before the end of the year to see what their tax liability is going to be. Not separating out breeding stock when you're doing sales, because breeding stock gets treated differently than selling calves. And not handling prepayments of expenses and deferrals of income correctly.
Okay.
Big deals too, aren't they?
Yes.
When you add those up, I mean, yeah.
So when we're talking about forecasting taxes, we're here in late December, and what sort of money have you saw that somebody could save if they, I'm sitting on some soybeans and I'm going to sell them because the price is good. Should I defer that payment, or what happens if I take the money and then don't buy it? Then I'm taxed on all that. Other reasons. I think that's something that's very important and something that can be easily looked over.
Well, tax planning, realistically, tax planning before the end of the year is actually the best money you can spend with your accountant. When I do it with my clients, especially my farm clients, because before the end of the year is the time when you've actually got a chance to do something different, whether it is sell or spend. Once you get past the end of the year, there are really very few tax planning opportunities left after the year is closed. Pretty much at that point, it's adding up the damage. So you can sit down with your tax accountant and see, if you need to sell or if you need to spend. And, and to try to level out your income from year to year. You may have a loss year, and you want to sell to eat up that loss, or
Sure.
your income may be higher than normal. Maybe you do want to defer or prepay some expenses to get that back down to a manageable level. And so what tax planning can do is give you an opportunity not to level out your income, and at the same time make sure you don't miss out any opportunities before the end of the year.
Well, and if somebody prepays for an expense like seed or fertilizer, there may be a prepaid discount that could, well, it magnifies the problem, but it's a good problem to have.
Right.
Because then
right.
you can
and then
maybe
you've got to balance out the tax savings with the prepaid discount and see, if it's worth it or not. Or maybe you go ahead and say you're sitting perfectly even, you're perfect where you want to be, but you want to go ahead and buy seed, and take that discount. Well, maybe you want to sell some extra grain, that's equal to the amount of that seed you bought, so you can keep your income still level instead of ending up with a loss or lower income than you would like. And the thing to remember about prepayments and deferral of income, or prepaying expenses and deferring income, is you're really not getting out of taxes. What you're doing is you're putting off the pain until the next year.
Stephen, can you hold on for just a second? We're
Sure.
going to go to a commercial, and then you come back with us when we come back, okay?
Okay.
Okay. We're going to be back with more of Stephen Luke and Bradley and his bull on Bull Sessions here on 680 KFEQ.